just after lunch is not the easiest time to do a session. But given we are discussing money, AI, and risk, hopefully people will find it worth their time. So, without much ado, I'll get started. The plan is to cover in 3 or 4 different blocks. The first block is where are payments headed, in what direction. Second is stable coins and agentic AI. How do they change things? Thirdly, what happens to the banks as an impact of this? And fourthly, therefore, what kind of international opportunities throw up? We'll see how much we can cover. We'll keep moving fast. So we'll start with where are payments headed? And maybe, Suresh, if I can start with yourself. India has built a payment ecosystem around UPI, which is really world class, right? Everybody around the world notices it. It's fast, it's ubiquitous. The question is, what's the next journey for it? Is it faster, invisible, or fundamentally different ways of moving money?
Thanks, Rohit. Uh, Absolutely. I think India is at the forefront and cutting edge of developing a world-class payment ecosystem. I think one interesting aspect from a consumer payment perspective is that we are heading to an area where we are moving from digital commerce to delegated commerce. So I think the payment journeys will accordingly change. Today, how are people actually discovering and purchasing stuff is going to be a very critical determinant as to how the payments evolve. Because right from a time when we would actually use technology to assist in discovery and purchase, we are talking about a time when the entire experience can be delegated. You have agents today going out doing the purchase for you. They are looking at variants. They are creating the cards and they're doing the checkouts. And they're going to an extent of even enabling payments to happen. So that changes the entire ecosystem completely. So what we are seeing clearly happening in the area of payments is that, first of all, our entire internet was built for human interface. So how do we, first of all, look at making the commerce itself agent ready? And that becomes the first part where when an agent is actually transacting, how is it different from a human to interact? And I think some of the work we are doing at Visa is clearly to see how do you make the the commerce sites ready for agent discovery. And we today even have uh, tools like creating agent scores for a site to tell is this site discoverable by the agent? Can they do their transactions smoothly? Can they actually transact seamlessly and complete the journey? The second part, which is very important, is trust. Till now, it was about the customer authentication and the credentials, the payment credentials we use. Now we are looking at a scenario where the trust has to be actually built into intent, whatever intent you are giving to the agent to consume, purchase, and then pay on your behalf. So, how do you define a trusted payment credential and how do you tokenize the same? Now, if I'm going on a journey and actually purchasing something, I need to be sure that the site where the purchase is happening is able to understand that this was the intent, and therefore, is it a bot or is it a actual agent which is behaving in the right manner? So
Mm.
tokenization becomes very critical. And last but not least is actually going to be controls. So the human control, the human intent of whatever you are giving as the program decision and the permission has to stay corrected. So I think payments are evolving for us in that manner.
Yeah.
And clearly the scalability will come around trust being at the bedrock rather than just looking at how do you make the journey faster.
Yeah.
And that will be the changing stance over here.
No, super. Thank you very much. PD, if I could ask your perspective, what is the next best shift for payments? And where does AI in particular fit into that?
So, firstly, thank you for having us here. And I must say something controversial after lunch, otherwise, we're all going to go to sleep. But jokes apart, you're absolutely right. I think it is AI which is going to drive the next phase of what we see in payments and the relevance of payments. We've heard some very exciting and interesting insights into how the human in the loop is always there, but are we dealing with a bot or are we dealing with a machine on the other end? what we've what I think we really want as a consumer is the fact that the payment certainty is overriding almost everything else. Yes, we want speed, we want a personalized experience. We do want the payment to happen. We want it to be done at the cheapest possible cost and all of that. But the fact that your money needs to reach the right place safely, I think is the first constituent, which is where AI comes in. So AI helps us with customizing the experience. AI helps us with making sure that all the bad actors are weeded out of the system. By the way, they're using AI as well. And all the bad actors know exactly where the weak spots are. So somewhere I do think, and regulators have also spoken about this, as the value and criticality of these payments increase with the help and use of machine learning and AI, we will have to bring in some amount of thought. You may call it friction. You may call it the ability to filter out the right and the wrong to make sure that the ultimate outcome is what we desire. So AI is extremely important, going to bring in customers, enhancement in experience, is going to bring in certainty of the payment, and is going to bring in definitely the safety that we all desire on the payment front.
Super. Thank you. And Madhav, if I can go to you next, we have lots of mechanisms, whether it is bank deposits or cards or UPIs or tokenized deposits or stable coins and so many rails to move the money, right? Are we moving towards a world where the consumer doesn't care what the rail is as long as the money moves? And then what happens to the institutions that build these rails?
Yeah. So clearly, at a customer level, they don't really care about the rail or the tool that's being used. All they care about are outcomes. They care about, is it delivered speedily? Is it delivered in a reliable manner? Is it delivered in a cost efficient way? Uh, is it creating certainty? Is it taking care of trust? But it doesn't take away, it's a completely different story when you look at the institutional layer. Each rail has different ways of how it deals with legal claim, how it deals with risk, where data is held, finality of the transactions, and the economics. And so for the institutions, how the rail behaves and how you choose a rail is very different from how a consumer will look at it. And so there is that dichotomy that needs to get married. So the real risk for the rail owners is that the rails don't really vanish. It's the rail part that becomes invisible and automated. Uh, if it's a wallet or a platform or it's an agent that's choosing the path, the institution that builds the rail needs to continue to retain salience with the customer that they are serving or the principal which is behind an agent that's mandated the agent to be able to actually work with them. And so really it's about institutions moving up the value chain and closer to the customer to be able to not let the rail become a commodity, but for actually adding value in finding the most optimal rail in which optimizes for cost, optimizes for speed. Not everything needs to move instantly. There are payments that can move slowly at a much lower cost point and with a different kind of finality, and also bring in that nuance in terms of cross-border. So that's really how institutions, even as the different rails become agnostic, will have to move and calibrate the conversation by being closer to the client.
Yeah, thank you. Very interesting perspective. We'll move to the next chapter, which is stable coins and agentic commerce. And maybe, John, if I can start with yourself. India has not yet opened its door for stable coins in a full-fledged way. And if you could share your perspective on what could stable coins bring beyond what existing mechanisms of payments are, especially in context of agentic commerce, or any other advantage that you think it brings.
Yeah, thank you, Rahul. And again, a plus one to all the comments that the previous speakers have made. We are in a beneficial position and honored to talk to lots of clients and consumers who are doing this. It may not be entirely obvious for people on the street every day, but you need to be very reassured that things in this space of digital assets and tokenization and stablecoins are being adopted very quickly, and the train has very much left the station. All of these large, traditional finance institutions have spent hundreds of billions of dollars or billions of dollars rather in this space, and the volumes are in the trillions of dollars. So it takes some time for that to actually sink in. Perhaps I should have said first, again, we're delighted to be part of this conversation. We've invested hundreds of millions of dollars in India and have hundreds of employees here. And I think the advantage for India is the talent advantage you have here. The talent in India is just absolutely phenomenal. And I've spent decades building businesses in China and other markets. And I think in this ascendant AI moment, this is really where the opportunity is for the interplay of digital assets, tokenization, and stablecoins. Just to be clear, stablecoins don't compete with UPI. UPI is a world-class platform that is lauded by other geographies, by the world's best fintech players. And stablecoins are really complementary to UPI. They're the digital layer, the native kind of on-chain money that will allow all of this AI to come to life. And some of the speakers were talking about agentic commerce. I was with some wonderful university students last night, and they're all trading, whether it's paper trading competitions with their college classmates or at their technical institutions or management schools. And they're very adept at watching patterns of trade, and they're all setting up their bots to be trading through the evenings and making micro payments. There's not really a risk of anything going terribly wrong because they've programmed their money. They're using a bot, they're using Claude to really control what they want to do. And so at Coinbase, our mission is economic freedom. We think people should be able to use these tools in AI to get the best outcomes for their own financial investing and their prosperity journey. This shouldn't be just controlled by the hedge funds or the biggest proprietary trading desks in the world. And so those are some of examples of what stable coins are enabling today already in India. This is very much happening right now, Rahul.
Super. I think moving to AI, and Suresh, if I can ask you, one thing that is likely to happen is the frauds and their sophistication levels with payments will increase. But so will also the ability of the networks to detect them. So are we moving towards a world where the ability to distinguish a genuine transaction from a non-genuine one becomes really the core source of advantage?
Yeah, so that's a very interesting area because what we are finding is AI works both ways, as PD was just now saying. So it gives the bad actors equal amount of scale and sophistication. Today, in order to create a phishing, message or do something which you can create a picture or something, it becomes very easy for them. So I think there are 2 or 3 shifts which will have to happen. One is clearly we will move to start detecting fraud and move it upstream. So it is not about once the transaction has happened and then you are trying to assess is it valid or not. You have to actually go a step beyond and see is it the right intent. Today in a push payment transaction, it's very easy that somebody can defraud you, and once you've authenticated the transaction in the right manner, you realize the intent was not there. So I think you have to actually go at the level of intent and understand behavioral and analytics to see how it works. Second thing we clearly see with AI coming in, static rules do not work. Static rules can only look backwards for you. It is going to be risk-based intelligence which comes into play, where you are able to see behavioral analytics. At a consumer level, you have to exactly map the consumer. So you're looking at velocity, you're looking at behavior, time of transaction, value of transaction. All these signals have to be seen on a real-time basis, and that becomes critical. And last but not least, something we all are challenged with, when we look at a mule account behavior, you have to take an ecosystem approach. You can no longer be looking in a fragmented manner. You have to look all across. So we've seen today that there are various initiatives coming into play. On one side, we are talking about introducing friction so that there is more time to be able to detect and make sure that the intent is right. What I would call out in a world of AI, it is important to have dynamic friction. So any transaction where the intent is clearly mapped, it flows through seamlessly. Wherever you have a challenge, you slow the transaction, you take your time and make out whether it is true or not. So I think it's a very fast moving world, and we are moving from static to dynamic rules.
Fantastic. And PD, if you can talk about any big change that AI will bring inside a bank's operations.
Yeah, the way I think of AI is like the Russian dolls. You peel away one layer at a time, and AI is getting closer to the core, very core of banking. Let's start at the basics. Like a bank like mine, for example, has trained in the last 12 months 55,000 people with 225,000 hours of AI training. With that kind of exposure to AI, what we've noticed is implementation of technology, and this is an example I'm giving. Implementation takes a very long time. 30% improvement in implementation of technology. So AI is not just an efficiency tool to reduce mundane tasks or to do things like that, but is actually helping in direct implementation of what we really want to do from a technology front. I think banks, as we know them today, may not be in the same form in the next 3 to 5 years. What that form and shape is going to be decided by the speed of adoption and by our ability to take some of these to the other level. If you see what the RBI governor said a few days ago on this Monday, and then the deputy governor said thereafter, I think the regulator is moving at an equal speed, learning as quickly as the industry is. That's what we saw, if I can dial back on UPI, where the certainty of regulation actually enabled us to reach where we are to, what is it, about 240 or 250 trillion transactions in a financial year.
Yeah, fantastic. And John, if I can ask you now, what we are seeing is AI agents are the buyers, and they could soon negotiate and traverse and buy and make transactions. And when the agents start to buy, right, and humans are not involved, how do we establish trust? How do we establish relationships with? And how do you distinguish between agents and humans?
Certainly, a great question, Rahul. I think when machines are talking to machines, there have to be guardrails in place. We index towards being referred to as the trusted exchange, and that means being regulated by MiCA, the regulatory guardrails in Europe, or that really cover over 20 economies, quite forward-looking regulation, but with a lot of compliance. And then in Australia, whether it's the Australian Securities Investment Commission or the custodian who oversees New York State or the SEC, when you've been vetted by BlackRock to launch an ETF, that's 3 or 4 years of due diligence. So we take that same responsibility and concern for customer safety, governance, and compliance into whatever we're doing in the AI space. At Coinbase, any code that is touching the customer has to have a human confirmation before that code is finalized. But actually, the space that has benefited the most from AI internally in our business has really been around compliance, risk payments, and lots of things around security. I think we're aware that a lot of the banks and digital exchanges have had to raise their security bar now with the infancy of AI. It's really forced a new bar to jump over for cybersecurity and controls internally. So there is still a human element, but again, having some guidance and guardrails is something that we request in whatever geography we're operating in.
Super. And Madhav, this is to you, and this has always intrigued me. If in past banks held money, information, and trust all together, and as all of this shift is happening, do they run a risk of becoming just an infrastructure provider, and all the other services get disintermediated? And if not, then what parts of the value chain they must retain to have a true future value-added identity?
Yeah, so even as the life of a payment becomes more and more agentic, banks will need to continue to perform 4 or 5 things that they currently do through the life of a payment. The first is when you receive a payment, you verify identity. You check whether the person sending the payment is actually who he purports to be. The next thing you do is you typically check uh, whether they have the execution authority or the mandate to execute what they're executing. Then you ensure settlement certainty because there are counterparties, there are clearing exchanges, you're dealing with things across borders, and that's something that you bring to the table. And when you move money or you move a payment, you're not just moving value, you're also moving data. And that data is very critical for the client in being able to reconcile, to be able to tell people that they've actually made a payment. It could be dealers, suppliers, it could be clients saying you finish your purchase on an e-commerce platform, etc. That's another piece that banks do as a part of what they do, and then ensure that this whole chain is auditable and verifiable. Now, when you break the payment down into each of these together is what we nebulously call trust. And there is a role to play in each of these in the agentic world. An agent is acting on behalf of a principal. There is a principal that is there. Now, each of these 4 or 5 areas that I talked about are stitched together loosely and can be done at different times. In an agentic world and in a world that's working on decentralized ledgers, all of this has to be done instantly. They all roll into one. Controls can't be a post facto bolt on. You have to do it as a part of the transaction. And if you're able to do this, then you're no longer a mover of money and infrastructure, but you're a trusted value provider in the payments ecosystem. And that's really what institutions have to do.
Super. Thank you. Moving on to slightly the international nature of things, and PD, if I can ask you, Standard Chartered has been one of the biggest custodian of international trade and payments, and as we see a lot of cross-border money payment happen, what role do banks evolve into in this nature?
I think you must have read about the recent SWIFT payment that came in 37 seconds, whereas people wait days, sometimes more than that, for cross-border payments to come into the country. So I think, firstly, the speed of which the payments are coming in at, what like Madhav mentioned, with the trust and ability to meet all regulations has gone to the next level for sure. The infrastructure provider Swift has also made sure that all the data fields, like again Madhav has said, required for regulatory compliance is also available in a seamless manner and again automated to the extent possible. When we have international payments, there are many aspects to it, very different from domestic payments. There is a foreign exchange angle, there is a risk angle, which is related to liquidity on either side. There is an ability to put it into the local rails where the money lands. So it's not just getting it into the country, whichever country that is, but also making sure it reaches the right through the right rails at the most efficient cost as well, which was also mentioned earlier. So I think international payments are now at the cusp of reaching that level of efficiency where we will see not only speed, cost, ability to the transparency, all of that will make sure that I think we will see a very different world in international payments. And again, this is extremely important in the phase that we are today with new vendors, new suppliers, new supply chains. Clients are struggling with onboarding new supply chains, new vendors from all across the world with what is happening. So bringing in all of that, I think a bank's role has never been more critical than it is today.
Fantastic. Thank you. And Madhav, if I can come to you, UPI is making a big push on the real-time forex. Do you think it could make it a part of the global payment architecture?
So what UPI has done very successfully over the many years in India is it's removed friction in local payments. And it's done it with 3 things. Speed, so with almost no cost, and with settlement finality, where it comes back and tells you that the payment has been executed and the counterparty has received it. These 3 building blocks have really what have contributed to how UPIs got built. Now, if you try to do that in the cross-border space, the most important foundational block that needs to get added to these 3 is you're dealing with multiple currencies and you're dealing with time zones, which means you need to be able to give a 24/7 cross-border settlement mechanism, which then works with these 3 pieces that are the value propositions that UPI brings, which is where the partnership that we've done with them is to be able to give over 120 currencies in multiple markets and the ability to settle instantly with clearing houses in multiple markets. And that's something that UPI has done exceedingly well. And while there are multiple global projects and there are bilateral relationships, I think it's clearly going off pilot stage into something that can be really scalable.
Super. And John, I think the last question to you on stable coins, CBDCs, and AI, are they really unlocking cross-border payments and amid the big geopolitical turmoil that is happening?
Yes, certainly. Maybe I'll bring some perspective from another very important remittance corridor, noting that I think India's remittances account for about 3% of GDP. Another important geography where this is very much alive is the Mexico-US trade channel. And so recent estimates there are suggesting that 10% of the flow of remittances across those borders are being driven by stablecoins. And I think consumers in both those markets are reassured by the Genius Act and the travel of future regulation around the Clarity Act that give protection to consumers on both sides in Mexico and in the US. And so those are some very significant numbers where you're taking hundreds of basis points off the cost of shifting money. If you're a migrant worker, those numbers are incredibly important. And that's something, that very much delivers economic freedom to people. So that's a very tangible, real life example right now.
Yeah. And one last question, Suresh, to you. How do you see Visa as a company evolve? It used to be a very card network kind of company, and with how things have moved from wallets to account payments to tokenization and all the new age mechanisms with AI playing, how do you see the future of Visa?
That's an interesting question. So I think the big part is that clearly while money movement is at the core of it, but if you see network like Visa is like a digital public infrastructure and primarily it's global in nature. So as we spoke about the fact that for any DPI, ultimately what you're talking about is the ability to move money in a trusted manner. So building the trust architecture, a lot of things we spoke about, fraud, risk detection, cyber resilience, ability to be sure what is the intent, how do you track the payment, and to make sure it reaches the right place. So there's a lot of work going in tokenization, in defining the right protocols for exchange, in agentic commerce and agentic payment protocols. So I think that is where we see the future, and that takes us far beyond just talking about it like a card company, but looking at a wide array of things which we actually put under our value-added services, which actually strengthen the ecosystem to meet the challenges of having a population scale digital public infrastructure in place.
Super. Gentlemen, we are on time, but outstanding input from all of you. Thank you so much. And thank you to the audience for being patient just after lunch. But I think this is certainly a space where the verdict is not out. As we heard how AI will impact, it will certainly impact. But how will it impact and how much companies will need to evolve? How will the business model evolve? Where will trust come in? Which entity will get disintermediated? A lot is to be played out, but very good perspectives on direction and mitigants. And let's keep our fingers crossed. Thank you, everyone. And thank you, everyone there.